For what purpose does the gentleman from Arkansas seek recognition?
Mr. Speaker, I move to suspend the rules and pass the bill H.R. 1993 as amended.
Clerk will report the title of the bill.
H.R. 1993, a bill to require the Secretary of the Treasury to mint coins in commemoration of the 25th anniversary of the September 11, 2001 terrorist attacks on the United States and to support programs at the National September 11 Memorial and Museum at the World Trade Center.
Pursuant to the rule, the gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, each will control 20 minutes. The chair recognizes the gentleman from Arkansas.
Mr. Speaker, I thank you. I ask unanimous consent that all members may have 5 legislative days to revise and extend their remarks and include extraneous material on this bill.
Without objection.
Mr. Speaker, I'm including in the record the Congressional Budget Office estimate for this bill.
Without objection.
Thank you, Mr. Speaker. I yield myself such time as I may consume.
The gentleman from Arkansas is recognized.
I rise today in strong support of H.R. 1993, the 25th anniversary of 9/11 Commemorative Coin Act. I want to thank my colleagues, Representatives Garbarino, Lawler, and Goldman, along with every other member who supported this effort, for introducing this important legislation honoring a pivotal moment in our nation's history and remembering the lives so tragically lost on that horrific day. The terrorist attacks of September 11, 2001 transformed our country. Nearly 3,000 innocent Americans lost their lives in New York City, at the Pentagon, and in the field at Shanksville, Pennsylvania. In the face of unimaginable tragedy, the American people demonstrated extraordinary courage, resilience, and unity. This bill recognizes the importance of preserving the memory of that horrible day and honoring those who made the ultimate sacrifice. H.R. 1993 authorizes the creation of a commemorative coin program marking the 25th anniversary of 9/11, giving Americans a meaningful way to participate in remembrance and reflection. The proceeds, Mr. Speaker, from this program will support the National September 11th Memorial Museum at the World Trade Center in New York City, honoring the memory of the victims and the heroic first responders who ran up those stairwells to try to save their fellow Americans. I especially want to recognize the firefighters, law enforcement officers, and emergency personnel, and service members whose bravery and selflessness embodied the very best of our nation in one of our most dark hours. The United States Mint has a long history of producing commemorative coins that recognize moments of profound national significance. And this legislation, Mr. Speaker, continues that tradition. So as we approach this momentous 25th anniversary of September 11th, it's fitting that this House consider legislation that reflects our shared history and reaffirms our commitment to never forget the lessons of that day. I'm proud to support this effort. I urge all my colleagues on both sides of the aisle to do the same. And I reserve the balance of my time.
The gentleman reserves. The gentlewoman from California is recognized.
I yield myself such time as I may consume.
The gentlewoman from California is recognized.
I rise in support of H.R. 1993, the 25th anniversary of 9/11 Commemorative Coin Act, sponsored by Representative Goldman of New York. This bill directs the Treasury Secretary to mint coins in remembrance of the 25th anniversary of the September 11th terrorist attacks. This is a day that deeply transformed our country and persists in the American memory. This legislation is important because it gives us the opportunity to honor the memory of the 2,977 lives that were taken during these attacks, the strength of their families and loved ones, the sacrifices of many others involved in the rescue, recovery, and relief efforts, and the courage of the survivors. Unfortunately, the devastation did not end that day. In the aftermath, countless people across the country continue to suffer from the physical and mental health impacts of this tragedy. Throughout the years, tens of thousands of first responders, construction workers, volunteers, and survivors have been injured or become ill from the toxic dust, smoke, and debris that we're exposed to. The data demonstrating these outcomes is heartbreaking. According to the World Trade Center Health Program, over 63,000 registered members have developed one or more medical issues rooted in their exposure to these toxins, and more than 9,000 people have died from 9/11 related illnesses. This is 3 times the number of people who were killed on September 11th itself. It is necessary that we continue to remember and honor those who have lost their lives, as well as meaningfully support the individuals who continue to battle these health challenges today. The National September 11th Memorial and Museum at the World Trade Center carries out this important work by providing services and engaging in education efforts, which is why I'm glad we're supporting this bill today. This legislation also includes a funding structure which would support the operations and maintenance of the memorial and museum so visitors and future generations continue to learn about these horrific events and the heroic efforts of Americans. So I urge my colleagues to support this bill, and I reserve the balance of my time.
Woman reserves. The gentleman from Arkansas is recognized.
Mr. Speaker, I yield 2 minutes to the gentleman from New York who represents that state so ably, who witnessed firsthand the destruction on 9/11. I'm grateful for Mr. Lawler's work in promoting this bill on the Republican side of the aisle. I yield the gentleman 2 minutes.
The gentleman from New York is recognized.
Thank you, Mr. Chairman. Mr. Speaker, I rise today in strong and steadfast support of H.R. 1993, the 25th anniversary of 9/11 Commemorative Coin Act. And I want to thank my colleagues from New York, in particular, Congressman Goldman and Garbarino, as well as 297 other colleagues who have co-sponsored this legislation. Almost 25 years ago, for the first time in history, New York stood silent. The city that never sleeps came to a halt, and we all went into mourning for the thousands of innocent people who died that day. 9/11 changed New York, and it changed America. And it continues to impact our communities today. To today, we still have first responders dying of 9/11 related illnesses. And it's why I have spent so much of my tenure in Congress working on behalf of the victims, their families, and our first responders. I'm currently working to pass legislation to award a Congressional Gold Medal to Wells Crowther posthumously, a local hero who helped save 18 lives, known as the man in the red bandana. He represents the very best of America. I've also led efforts to ensure and expedite disbursements from the U.S. Victims of State-Sponsored Terrorism Fund. And just in the past few months, my New York colleagues and I secured lifetime funding for the World Trade Center Health Program. Not only am I committed to taking care of our 9/11 community today, but I'm committed to keeping our fallen Americans in our hearts, our minds, and our prayers each and every day, and especially every year on September 11th. This bill will allow the U.S. Mint to furnish a coin to commemorate the 25th anniversary of the attacks, and notably the surcharge proceeds of this coin will go towards the National 9/11 Memorial and Museum to help with the incredible work they do to tell the story of 9/11 and the resilience of New York.
I yield the gentleman 30 more seconds.
The gentleman is recognized.
We have promised to never forget 9/11, and we never will. We are committed to upholding that promise. I know my colleagues in Congress support this legislation, and I look forward to its unanimous adoption. Thank you, and I yield the remainder of my time.
I reserve.
The gentleman reserves. The gentlewoman from California is recognized.
Thank you very much, Mr. Speaker. I am so proud to yield 3 minutes to the gentleman from New York who has been a real leader in putting this legislation together, Mr. Goldman, the sponsor of this bill.
The gentleman from New York is recognized.
Thank you, Mr. Speaker, and I thank the ranking member for her support, as well as the chairman for moving this forward. I rise today in support of H.R. 1993, the 9/11 Commemorative Coin Act, as we are fast approaching the 25th anniversary of the worst attack on American soil in our history, a day when we lost almost 3,000 of our loved ones, neighbors, and friends in a coordinated attack by terrorists who wanted to destroy the very values for which our country stands: liberty and justice for all. We can never forget those we lost, and I will never forget that day myself, watching from my apartment building less than a mile away as the second plane hurled itself into the towers. Then seeing people covered in soot walking uptown, while our heroes, the NYPD, the New York Fire Department, charged downtown into the building to try to save whomever they could. Nor can we forget what came in the days and weeks that followed. Countless heroes who rushed into the danger, who then spent months on a pile that turned out to be poisonous and searching for survivors. These individuals are the very best of us, and their selflessness and courage embody the resilience of our city, what it means to be a New Yorker, and our country. And we will never forget them. Since 9/11, more people have died from 9/11 related health problems than even died that day. I was proud to have joined last year with my Republican colleagues from New York to ensure that we are fully fund and indefinitely fund the World Trade Center Health Program, which now has well over 100,000 members from every state in the country. As we approach this anniversary, I'm proud to lead this bill, to direct the Department of Treasury to issue coins to commemorate this dark day in American history, and to ensure that the events of September 11, 2001 are forever enshrined in our collective memory. Commemorative coins recognize some of the most important events and people in American history. The enactment of the Civil Rights Act of 1964 that outlawed racial segregation. The brave African-American high school students at Little Rock Central High School after Brown versus Board of Education. The astronauts who took the first steps on the moon. It is fitting that the victims and heroes of 9/11 will be honored in this same way. Proceeds from the sale of this coin will go directly to the September 11th Memorial and Museum at the World Trade Center to support its critical work educating future generations and remembering those we lost. This legislation has received overwhelming bipartisan support, and I want to thank my friends and fellow New Yorkers, Chairman Garbarino, as well as Representative
Gentleman's
Lawler.
time's expired.
I yield additional second to 2 seconds, 3 seconds, 5 seconds to the gentleman from
5
New York.
Maybe. Let's try 30. And I want to thank my friends and fellow New Yorkers, Chairman Garbarino and Representative Mike Lawler, for their partnership and work on this bill. We have over 300 of our colleagues who have joined in this effort, and I'm deeply grateful for their support as the representative of 9/11 in Congress. We must honor our promise to never forget, and I urge my colleagues to join me in passing this critical legislation. I yield back.
The gentlewoman reserves. The gentleman from Arkansas is recognized.
Thank you, Mr. Speaker. I want to grant 2 minutes on floor time today to the chairman of our Homeland Security Committee, who also is a distinguished member of our House Financial Services Committee, the gentleman from New York, Mr. Garbarino.
The gentleman is recognized for 2 minutes.
Thank you very much, Chairman. Mr. Speaker, I rise today in support of my bill, the 25th anniversary of 9/11 Commemorative Coin Act. As representative of Long Island and New York, I can say this is a deeply personal matter for me and the people I represent. This bill authorizes commemorative coins to mark the 25th anniversary of September 11th and honor the lives lost and the resilience of our country in the aftermath of the attacks. The design process will include the 9/11 Memorial Museum, cost to taxpayers. Mr. Speaker, New Yorkers will never forget the bravery of the first responders who ran toward danger or the unity this country showed in one of our darkest moments. As we approach the 25th anniversary of the attacks, we have a responsibility to preserve these stories and ensure future generations understand the sacrifices made that day. We must always remember the innocent people we lost on September 11th, the first responders who answered the call, and the strength the American people showed in the face of tragedy. I want to thank my colleagues from both sides of the aisle for supporting this legislation, and I want to urge them all to support it, and I yield back.
Gentleman yields. Gentleman from Arkansas reserves. The gentlewoman from California is recognized.
Thank you, Mr. Speaker. I have no further speakers, and I'm prepared to close if the gentleman from Arkansas has no further speakers. Mr. Speaker, I yield myself the balance of the time. This legislation would establish the creation of commemorative coins in light of the 25th anniversary of the September 11, 2001 terrorist attacks. These commemorative coins and the critical work of the National September 11th Memorial and Museum will help us honor the bravery of Americans for many generations to come. I urge my colleagues to support this bill, and I yield back the balance of my time.
The gentlewoman yields. The gentleman from Arkansas is recognized.
Both sides of the aisle recall the service and sacrifice and horrors of 9/11 as we prepare for the 25th anniversary. I think it's a fitting way to demonstrate America's belief in its future and remembrance of a day that deserves to never be forgotten like we experienced on 9/11. So I thank the ranking member of the full committee in working with me to present this bill to the House today. I urge all my colleagues on both sides of the aisle to support it, and I yield back the balance of my time.
The gentleman yields. The question is, will the House suspend the rules and pass H.R. 1993 as amended? Those in favor say aye. Those opposed say no. In the opinion of the chairs, 2/3 being the affirmative.
I request a recorded vote.
Does request a recorded vote? The yeas?
Yes.
The yeas and nays are requested. All those in favor of taking this vote by yeas and nays will rise and stay standing until counted. A sufficient number having risen, the yeas and nays are ordered pursuant to Clause 8 of Rule 20. Further proceedings on this question.
To suspend the rules and pass the bill H.R. 3234 as amended.
The clerk will report the title of the bill.
H.R. 3234, a bill to amend the Federal Deposit Insurance Act to modify the amount of reciprocal deposits of an insured depository institution that are not considered to be funds obtained by or through a deposit broker and for other purposes.
Pursuant to the rule, the gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, will each control 20 minutes. The chair recognizes the gentleman from Arkansas.
Mr. Speaker, I ask unanimous estimate for this bill.
Without objection.
Thank you, Mr. Speaker. I yield myself such time as I may consume.
The gentleman is recognized.
Mr. Speaker, I rise in support of H.R. 3234, the Keeping Deposits Local Act, and I want to thank my longtime friend and our Majority Whip, Tom Emmer of Minnesota, and Congresswoman Joyce Beatty for their tremendous bipartisan leadership on this particular matter. I also want to thank the ranking member of our full committee, the House Financial Services Committee, for her continued willingness to work across the aisle on cornerstone reform deserve a regulatory framework that encourages them to compete, grow, and better serve their customers. Reciprocal deposits are a proven tool that helps banks attract, retain, and diversify their funding sources while simultaneously giving depositors greater FDIC insurance coverage. As the former community bank CEO, I personally use this service to help provide better service for important customers. Right now, overly burdensome broker deposit regulations are standing in the way. Community banks, many of which operate with a limited branch network, are being penalized for using a funding tool that poses no meaningful risk to financial stability. Majority Whip Emmer, Congresswoman Beatty, their bill addresses this issue. It allows community banks to accept a greater volume of reciprocal deposits before triggering the overly stringent broker deposit rules. This, in turn, frees up more capital to make loans in the communities they serve. Additionally, as a bank's size increases, the threshold for reciprocal deposits that it may accept decreases, ensuring that oversight scales with risk. The bill also directs the FDIC to study reciprocal deposits and report back to the Congress, ensuring that we have the data to inform future direction on deposit insurance policy. This is the kind of smart, targeted reform that's been at the heart of my efforts to make community banking great again in our legislative agenda in this 119th Congress. I'm proud to support this bill by Mr. Emmer. I urge my colleagues to do the same, and I reserve the balance of my time.
The gentlewoman from California is recognized.
Recognize?
Yes, the gentlewoman from California
Thank
is
you. I
recognized.
yield myself such time as I may consume.
Gentlewoman's
I
recognized.
rise in support of H.R. 3234, the Keeping Deposits Local Act, sponsored by Representative Emmer and our former Diversity and Inclusion Subcommittee Chairwoman, Ms. Joyce Beatty. I appreciate the sponsors' bipartisan work on this bill. In 2018, I worked with them to establish the initial framework for the so-called reciprocal deposits. When a business comes to a bank and deposits, say, $1 million to cover payroll and other expenses, the FDIC only insures up to $250,000. To help these customers receive deposit insurance on all of their deposits, banks can send a deposit over the $250,000 cap to another bank in exchange for a separate deposit from the receiving bank, which is known as a reciprocal deposit. The product has become popular, especially after the dramatic failures of Silicon Valley Bank and two other regional banks in 2023, because businesses wanted to make sure they don't have any uninsured depositors. So this bill would increase the limits we set back in 2018 based on a bank's size. Now, mega banks don't need our help because they are unfortunately still perceived as too big to fail. In fact, a number of small businesses moved their deposits to mega banks after the 2023 regional bank failures. So I appreciate that the chairman and the sponsors worked with me to address my concerns that an earlier version of this bill would have been a windfall for megabanks. But now it has been revised to ensure the bill prioritizes support for smaller community and mid-sized banks like MDIs and CDFI banks. But there is more that we should do than just this bill. Since 2007, there have been at least 37 bank failures where emergency tools were not used to protect depositors because the bank was too small. As a result, small business customers with more than $250,000 lost money through no fault of their own when their bank failed. That's not fair. And after convening a roundtable with industry experts and consulting extensively with our former chairman, Mr. McHenry, I introduced my bill, H.R. 4551, the Employee Paycheck and Small Business Protection Act. Under my bill, the government would take a data-driven approach, conduct an extensive analysis, and then propose an increase to the $250,000 deposit insurance threshold for business payment accounts. There would be multiple opportunities for stakeholders to weigh in as the proposal gets developed, with extensive congressional oversight. Furthermore, my bill would allow regulators to do an emergency transaction, account, guarantee, or tag program for up to 9 months, just like the FDIC did in the 2008 crisis, to protect depositors from harm in major crises. My bill would help protect all small businesses and their employees while helping community banks and credit unions better serve their communities. This concept has broad support, including with several House Republicans recently introducing their own bills, along with the bipartisan effort in the Senate. Moreover, Vice President Vance and Treasury Secretary Besant are strongly supportive of these efforts. In a letter from which we marked up this bill we're considering today, the Independent Community Bankers of America wrote, ICBA looks forward to working with the committee on the broader, comprehensive deposit insurance coverage level debate and ensuring more small businesses can have important protection for their deposits. We should do more. But in the meantime, I urge my colleagues to support H.R. 3234, which will complement broader deposit insurance reform efforts, and I reserve the balance of my time.
The gentlewoman reserves. The gentleman from Arkansas is recognized.
Thank you, Mr. Speaker. I want to recognize the author from the Republican side of this important bill that helps our community banks better serve their customers through a diverse approach to deposit insurance. To the gentleman from Minnesota, who is the majority whip of the Republican-led House, Mr. Emmer of Minnesota, I'll yield him 2 minutes.
The gentleman is recognized.
Thank you, Mr. Speaker, and thank you, Mr. Chairman. Reciprocal deposits are secure, fully FDIC-insured deposits that enable community banks to retain local funds while at the same time ensuring those deposits remain protected. In 2018, Congress enacted nonpartisan legislation recognizing that most reciprocal deposits should not be treated as brokered deposit. I was proud to lead that initiative then, and I'm proud to build on that progress with the bill before us today. Since the enactment of S. 2155 nearly 8 years ago, many banks have turned to these low-cost core deposits as they've approached the current limits of the lesser of $5 billion or 20% of total liabilities. In response, my colleague, Representative Beatty, and I introduced the Keeping Deposits Local Act, a nonpartisan bill that updates existing thresholds so that community and regional banks can more easily qualify for non-brokered treatment of reciprocal deposits. Simply put, this bill brings our laws in line with today's economic realities. It gives banks much-needed flexibility and offers local communities better access to capital, all while making our banking system more resilient. I want to thank Chairman Hill for his tireless work and advocacy on this issue, and I encourage all of our colleagues to support this bill. Let's give our local banks the tools they need to grow, compete, and invest in Main Street. With that, I yield back.
The gentleman yields. The gentleman from Arkansas reserves. The gentlewoman from California is recognized.
I'm very proud to yield 3 minutes to the gentlewoman from Ohio, Ms. Beatty, who is the co-lead on this bill.
The gentlewoman from Ohio is recognized.
Mr. Speaker, I rise in support of my bill, H.R. 3234, the Keeping Deposits Local Act, which I am very proud to co-lead with Congressman Emmers. This bill modernizes the treatment of reciprocal deposits to help small banks and mid-sized banks improve liquidity, to increase local community lending, and to better compete for larger accounts, all without jeopardizing the safety and the soundness of our financial system. Following the bank failures in 2018, we've seen many banks turn to reciprocal deposits to meet consumers' demand, to increase their insured deposits, and really to prevent capital flight. However, community banks across the country and regional banks, like in my home district, banks like Huntington Bank, Fifth Third, and Key Bank, are quickly running up against the current $5 billion or 20% threshold that was established in 2018. This means that they are limited in their capacity to attract deposits from nonprofits, from small businesses, and local governments and municipalities that want to support economic and community development. To solve this problem, this bill replaces the current cap with a tiered system to ensure that the greatest benefit goes to the banks that need it the most. Minority Deposit Institutions, or MDIs, Community Development Financial Institutions, or CDFIs, and inner city, rural, small banks in the front lines of providing financial services to underserved communities. Mr. Speaker, increasing non-brokered treatment of reciprocal deposits will greatly support these institutions by allowing them to access stable funding to help finance affordable housing projects, small businesses, and community infrastructure. That's why I am proud to say that this bill has the support of the Ohio Bankers League and the Ohio Regional Bankers. It is a bipartisan bill, and I want to thank our chairman, Congressman Hill, and I want to thank my ranking member, Congresswoman Maxine Waters, for supporting and pushing this bill forward. I urge my colleagues to support the passage of this bill, and I yield back.
The gentlewoman yields. The gentlewoman from California reserves. The gentleman from Arkansas is recognized.
Mr. Speaker, I'm prepared to close if the ranking member is as well.
The gentleman reserves. The gentlewoman from California is recognized.
I have no further speakers, and I'm prepared to close.
Gentlewoman is
if
recognized.
the gentleman from Arkansas has no further speakers.
Is recognized.
Thank you. Mr. Speaker, I yield myself the balance of the time. This is a good bill that will help community banks. The bank is supported by the National Bankers Association and the Community Development Bankers Association, and I'm very pleased to support it. As we have discussed, there is more Congress can do to update the deposit insurance reform framework to ensure it is working for community banks, for mid-sized banks, for MDIs, CDFIs, for rural banks, and all of their customers, especially the small businesses, nonprofits, churches, and other organizations, and their workers. Let's pass comprehensive deposit insurance reform into law without further delay. In the meantime, I again urge my colleagues to support this bill, and I yield back the balance of my time.
The gentlewoman yields. The gentleman from Arkansas is recognized.
Thanks, Mr. Speaker. I want to thank again the Whip Emmer and Ms. Beatty for their tireless work on this. It's taken a lot of years of collaboration between both parties on both sides of the aisle to find a path to move this bill forward, and we couldn't have done it without the hard work of the gentleman from Minnesota and the gentlewoman from Ohio. So I'm grateful for their work. I recommend everybody on both sides of the aisle support this bill, and I yield back the balance of my time.
The gentleman yields. The question is, will the House suspend the rules and pass H.R. 3234 as amended? Those in favor say aye. Those opposed say no. In the opinion of the chair, 2/3 being in the affirmative, the rules are suspended. The bill.
Mr. Speaker.
For purposes, gentleman from Arkansas seek recognition.
I'd ask for the yeas and nays.
The yeas and nays are requested. All those in favor of taking this vote by yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered pursuant to Clause 8 of Rule 20. Further proceedings on this question will be postponed. For what purposes the gentleman from Arkansas seek recognition?
I move to suspend the rules and pass the bill H.R. 4544 as amended.
The clerk will report the title of the bill.
H.R. 4544, a bill to direct certain federal banking and credit union agencies to promote the formation of de novo regulated institutions through the review of application processes, the review of capital raising by de novo regulated institutions, and the establishment of various outreach programs and for other purposes.
Pursuant to the rule, the gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, will each control 20 minutes. The chair recognizes the gentleman from Arkansas.
Thank you, Mr. Speaker. I ask unanimous consent that all members have 5 legislative days to revise and extend their remarks and include extraneous material on this measure.
Without objection.
Mr. Speaker, I'm also including in the record the CBO estimate for this bill.
Without objection.
Mr. Speaker, I yield myself such time as I may consume.
The gentleman is recognized.
I rise in support of the ranking member's bill, H.R. 4544, the American Access to Banking Act. I want to thank Mrs. Waters for her diligent work on this important bipartisan legislation. Over the past decade, Mr. Speaker, the United States has lost nearly 2,000 community banks, while only 62 de novo banks have opened during that same period. These essential institutions have disappeared from main streets across America due to mergers and acquisitions and bank failures. In 1 out of every 3 counties in our country, a community bank is the only on-the-ground banking option. 1 out of every 3 counties. That's why it's important to consider this bill. Mr. Speaker, I was the CEO of a community bank in the Mississippi Delta, where there were very few banking offices available for the small businesses and agricultural communities spread out across the rural heartland. And I have to say, it's very troubling when a local farmer tries to finance his equipment, or where a small business owner wants to expand their restaurant or get their first loan to start a business, if there's not a community bank. That's where families go to build relationships with lenders who know their names, understand their communities, and recognize their circumstances. So why aren't new banks forming? Because we've made it extraordinarily difficult to start one. The application process is often complex, duplicative, and overly burdensome, and some of the requirements aren't even in statute that are held out for that young business development team, those young officers who want to go out on their own to serve a community by creating a new depository institution. And that's why I'm pleased to support the ranking member of the full committee, Mrs. Waters of California's American Access to Banking Act. This bill directs the federal bank regulators to make it easier to start a new bank or credit union by streamlining the application process, improving the capital raising options, establishing mentorship programs, and strengthening coordination between federal and state regulators. Banking is not a partisan issue, and every American deserves access to a financial institution that can meet their needs. This bill is very complimentary of efforts made by our Financial Institutions Subcommittee Chair, Andy Barr of Kentucky, to try to remove barriers to improving the ability to start a bank in this country. So I'm a proud supporter of this bipartisan legislation. I thank the ranking member for her leadership on it. I encourage my colleagues to support it, and I reserve.
The gentleman reserves. The gentlewoman from California is recognized.
I yield myself such time as I may consume.
The gentlewoman is recognized.
I rise in support of H.R. 4544, the American Access to Banking Act that I sponsored. The number of new banks and credit unions called de novo institutions that were formed over the past 15 years have been very, very low. There are only 6 new bank charters issued annually the past 15 years, and only 29 new credit unions formed between 2014 and 2023. During that time, we saw about 1/3 of all minority depository institutions, or MDIs, disappear, including half of our Black-owned banks. Now, research from the Federal Reserve and others found a strong correlation between the interest rule environment and new bank formation. In fact, we have historically low interest rates at 0% for many years as we slowly recovered from the crisis. But there is more we can do to help. Earlier this year, Rashonda Young testified before our committee about the challenges she is facing just trying to establish an MDI in Iowa. Ms. Young's story is remarkable. When she was a small business owner with a popcorn business, she tried to get a loan. and she was discriminated against by bank after bank after bank. What did she do? She joined with other entrepreneurs and sued the Consumer Financial Protection Bureau for dragging its feet and not implementing Section 1071 to ensure we have a more fair and transparent small business loan market. Her lawsuit helped push the CFPB to finalize that overdue rule. But Ms. Young did not stop there. She decided to start her own bank so that she could provide the kind of small businesses loans to others that she was repeatedly denied for. Ms. Young's story is an American story. When you get knocked down, you get back up and you keep pushing for a better way. Not only that, but you work to help others in your community so they can have chances that you never had. In her testimony, Ms. Young highlighted a few challenges with the de novo process, like a lengthy application checklist. My bill would require these outdated procedures to be streamlined. My bill would also minimize duplicative data requests and require regulators to review capital-raising challenges they both face in consultation with the SEC. My bill also requires the designation of a caseworker as a single point of contact to assist de novo applicants throughout the process. H.R. 4544 further requires the development of outreach and education programs and federal regulator engagement with stakeholders, as well as coordination with state regulators to support them in chartering de novo firms. For any American like Ms. Young who wants to start a bank or a credit union, they should have that chance, and the American Access Banking Act will help give them that chance. I urge members to support my bill, and I reserve the balance of my time.
The gentlewoman reserves. The gentleman from Arkansas is recognized.
I thank the Speaker. I want to again thank the gentleman for her work on this bill. Over this Congress, we've had some really inspirational people come and testify. In fact, all three that I'm picturing in my mind are women, and all three came to the committee to talk about the burdens of trying to start a new bank or build a small community bank. I remember Bank Miami was a case, and there have been quite a number of startup banks in South Florida that are minority depository institutions. We had inspirational speakers in our committee, and they said, you know, we need to do better here on this. And this is at the heart of what the ranking member is talking about, is how can we improve this process so that more people can take that decision if their market and their characteristics of their economics and their geography would be rewarded by a new bank startup. So we don't have any more speakers on this side of the aisle, ranking member, but I want to thank you for your leadership, invite you to close, and urge all of our colleagues to support your effort.
Thank you so very much, Mr.
The gentleman
Chairman.
reserves. The gentlewoman from California is recognized.
Thank you, Mr. Chairman, very much. I have no further speakers, and I'm prepared to close if the gentleman from Arkansas has no further speakers.
The gentleman from California is recognized.
Mr. Speaker, I yield myself the balance of the time. Thank you, Mr. Chairman, for advancing my bill to this point and helping to get it passed through the House, not only as a standalone bill, but also as part of our housing bill. Entrepreneurs like Ms. Rashonda Young, who dream of starting their own bank or credit union and provide access to affordable financial products and services to neighbors in their community, should have that chance. My bill has broad support, including from the American Bankers Association, America's Credit Unions, Conference of State Bank Supervisors, Consumer Federation of America, Defense Credit Union Council, National Bankers Association, and National Community Reinvestment Coalition. I urge all my colleagues to support this bill, and I yield back the balance of my time.
The gentlewoman yields. The gentleman from Arkansas is recognized.
Mr. Speaker, I again congratulate the ranking member for her work on this bill. I urge all my colleagues to support it, and I yield back the balance of my time.
The gentleman yields. The question is, will the House suspend the rules and pass H.R. 4544 as amended? In the opinion of those in favor, say aye. Those opposed, say no. In the opinion of the chair, the two-thirds being in the affirmative.
Speaker, I'd request the yeas and nays.
The yeas and nays are requested. All those in favor of taking this vote by the yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered. Pursuant to Clause 8 of Rule 20, further proceedings on this question will be postponed. For purposes, the gentleman from Arkansas seek recognition.
I move to suspend the rules and pass the bill H.R. 5317 as amended.
The clerk will report the title of the bill.
H.R. 5317, a bill to amend the Federal Deposit Insurance Act to ensure that certain custodial deposits of well-capitalized insured depository institutions are not considered to be funds obtained by or through deposit brokers and for other purposes.
Pursuant to the rule, the gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, will each control 20 minutes. The chair recognizes the gentleman from Arkansas.
Mr. Speaker, thank you. I ask unanimous consent that all members may have 5 legislative days to revise and extend their remarks and include extraneous material on this bill.
Without objection.
Mr. Speaker, I also included for the record the Congressional Budget Office estimate for the bill.
Without objection.
Mr. Speaker, I yield myself such time as I may consume.
The gentleman is recognized.
I thank the Speaker. I want to speak in support of H.R. 5317, the Community Bank Deposit Access Act. This is a bill that over my time in Congress I've introduced several times and worked with colleagues to extend the ability to attract deposits to local community banks to make them more competitive. This bill works to essentially give community banks greater flexibility to access stable and reliable funding sources so that they can continue to meet the financial needs of the communities they serve. Community banks, as we've talked about today, play a vital role in our local economies by supporting small businesses, farmers, and consumers who depend on them for access to credit and other essential financial services. It's why it's important that our community institutions have access to a diverse and dependable set of funding sources so that they can continue to meet these demands. One source of funding comes through custodial deposits, which are the funds placed at a bank by a third party on behalf of underlying customers or beneficiaries who own the funds but may not have a direct banking relationship with that institution. Mr. Speaker, a few minutes ago we talked about reciprocal deposits. Let's say I'm a small business. I have $500,000 as a typical average collected balance in my business, but I only have deposit insurance of $250,000. The reciprocal deposit bill that Ms. Beatty offered a few minutes ago with Tom Emmer of Minnesota allows that other $250,000 for that small business to be covered for deposit insurance. Very important, very useful to have that customer-bank service relationship. Custodial deposits are similar, but what if it's a much larger amount of money, a much bigger business? And custodial deposits allow banks to serve their customer that way with one statement by seeing the money spread across more banks. This is a cash management product that allows a local community bank to play a lead role in treasury management for a larger commercial customer. Let's say, for example, a landlord might place tenant security deposits in a custodial account at a local bank, even though the tenants remain the ultimate owner of those funds, and hence the ability to be benefited by that. These arrangements provide benefits to all the parties involved. Banks gain access to stable, low-cost deposits, while customers and third parties benefit from the convenience of a more centralized account management function, along with the protections provided by deposit insurance. The FDIC has long recognized this deposit insurance process and how it can apply on a pass-through basis, meaning that underlying funds remain insured so long as each beneficiary's share stays within the applicable deposit insurance limit. My bill would expand access to these arrangements for banks under $10 billion in assets that maintain strong capital levels and sound supervisory ratings, or otherwise receive a waiver from their primary bank regulator. Custodial deposits are a stable relationship-based funding source that allows a community bank to support small businesses, families, and local economies. These deposits can provide smaller institutions with access to depositors and funding relationships that might otherwise be out of reach and help diversify their funding base and improve their financial stability. Yet under current law, many of these deposits are treated as the same as if they were brokered deposits, subject to rules that were never intended for these type of relationship accounts. This outdated treatment creates unnecessary burdens for community banks and limits their ability to responsibly utilize custodial deposits to support lending in their communities. By clarifying that custodial deposits are not broker deposits if they do not exceed 20% of the total liabilities of the community bank, my bill gives lenders certainty they need to accept these funds and put that money to work in their communities. This is a common sense, bipartisan solution that strengthens community banks, supports local lending, and preserves the safety and soundness of the financial system without increasing the risk to our deposit insurance fund. I urge all my colleagues to support this bill, and I reserve.
The gentleman from Arkansas reserves. The gentlelady from California is recognized.
Thank you very much. I yield myself such time as I may consume.
The gentlelady is recognized.
I rise in support of H.R. 5317, the Community Bank Deposit Access Act of 2025, sponsored by Chairman Hill. Let me start by thanking the chairman for his focus on supporting community banks and credit unions, including community development financial institutions, or CDFIs, and minority depository institutions, or MDIs. This bill will allow community banks to receive so-called custodial deposits from larger banks and then use those funds to lend into their communities. Custodial deposits are shared between banks in a network, allowing them to provide FDIC insurance on amounts larger than $250,000, although for a fee paid by the MDI or community bank. Mr. Chairman, your original introduced bill would have provided an unnecessary exemption for the largest banks, which, as we have discussed, honestly don't need help competing for deposits. I appreciate that you and your staff worked with us on important improvements to narrow the focus of this bill to just support community banks. Furthermore, as I've said before, I do not believe this reform will single-handedly get community banks all the help they need to compete for deposits and acquire more small business customers. So, I would again urge the chairman and the supporters of this bill to work with me and support advancing deposit insurance reform, like my bill, which takes a data-driven approach that the chairman said he would prefer, with opportunities for stakeholder input and congressional oversight. I also want to commend Representatives Lucas, Barr, Muser, and Stutzman for recently introducing their own deposit insurance reform bills. I couldn't help but notice their bills have a lot of similarities with my bill and with similar bipartisan reform efforts in the Senate. So, Mr. Chairman, it has been more than 15 years since Congress updated our deposit insurance framework, and it's time for Congress to comprehensively update it again. H.R. 5317 is a good piece of that reform effort, and I urge my colleagues to support the chairman's bill, and I reserve the balance of my time.
Gentlelady from California reserves. The gentleman from Arkansas is recognized.
Mr. Speaker, I'm prepared to close if the gentlewoman is, and so I yield to her. Reserve.
Gentleman reserves.
Mr. Speaker, I have no further speakers, and I'm prepared to close if the gentleman from Arkansas has no further speakers.
Gentlewoman is recognized.
Mr. Speaker, I yield myself the balance of the time. I again thank the chairman for working with me regarding improvements that were made to the bill in markup to ensure it focused on helping community banks. Custodial deposits are something that community banks can use as a funding source to help them better serve their communities. I hope today's vote on this bill and Representative Irmer's and Representative Beatty's bill is just the beginning in our efforts to modernize our deposit insurance framework broadly and to provide even more tools for community banks to compete for deposits from local churches, nonprofits, city governments, and small businesses. So I urge the chairman to work with me and our members to advance broad deposit insurance reform. In the meantime, I urge the House to advance the chairman's bill, which serves as a good complementary reform to help our smallest banks compete. I yield back the balance of my time.
Gentlelady yields. The gentleman from Arkansas is recognized.
Thank you, Mr. Speaker. I yield the balance of my time to myself. Let me say I appreciate the gentlewoman's engagement on deposit insurance policy at large. I think it's an important topic. She and I both share the importance of reviewing our deposit insurance system, make sure it's competitive, make sure it encourages safe and sound banking, make sure it doesn't expand in any way the moral hazard associated with too much reliance on a government safety net that in any way that might encourage too great risk-taking. She's right, we should do that in a data-dependent way and do that collectively, and we've had assistance in that regard from the FDIC and others. So I'm grateful to her for her cooperation on moving the reciprocal deposit bill earlier today, Ms. Beatty and Mr. Emmer's bill, and this custodial deposit effort. Both these bills help our community banks be more competitive across the country as they try to grow their business in the face of a lot of competition, Mr. Speaker. So I thank the gentlewoman for her support. I urge a yes vote on both sides of the aisle, and I yield back the balance of my time.
The question is, will the House suspend the rules and pass the bill, H.R. 5317? Those in favor say aye. Those opposed, no. In the opinion of the chair, 2/3 being in the affirmative, the rules are suspended. The bill is passed, and without objection, the motion to reconsider is laid on the
Mr. Speaker, I'd ask the yeas and
gentleman
nays.
from Arkansas seek recognition.
I request the yeas and nays.
The yeas and nays are requested. All those in favor of taking this vote by the yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered. Pursuant to Clause 8 of Rule 20, further proceedings on this question will be postponed. For what purpose does the gentleman from Arkansas seek recognition?
I move to suspend the rules and agree to the resolution, H-Res 1299, providing for the concurrence by the House in the Senate amendment to H.R. 6644 with an amendment.
The clerk will report the title of the resolution.
House Resolution 1299, resolution providing for concurrence by the House in the Senate amendment to H.R. 6644 with amendment.
Pursuant to the rule, the gentleman from Arkansas, Mr. Hill, and the gentlewoman from California, Ms. Waters, each will control 20 minutes. The chair recognizes the gentleman from Arkansas.
I ask unanimous consent that all members may have 5 legislative days to revise and extend their remarks and include extraneous materials on this resolution.
Without objection.
Mr. Speaker, I also include in the record the Congressional Budget Office estimate for this bill.
Without objection.
Mr. Speaker, I yield myself such time as I may consume.
Is recognized.
I rise today in strong support of the House amendment to the 21st Century Road to Housing Act. I share in President Trump's commitment to delivering a housing bill that puts American families first and expands access to American home ownership. Over the last couple of months, we've heard clear concerns from literally hundreds, Mr. Speaker, of bipartisan members and stakeholders expressing concerns with some of the provisions that were contained in the Senate-passed version of a housing bill. And for Ranking Member Waters and myself, for Ranking Member Cleaver on the Subcommittee on Housing, Chairman Flood, this has been years of work in the making and months of intensive work in this 119th Congress to find a path that improves accessibility on housing for the American people and affordability for the American people that could be a bicameral, bipartisan housing measure. This amendment that's before us today that amends the good work of the Senate is exactly that. Hours and hours of listening to the American people across our cities, hours of testimony in our subcommittee of Housing and Insurance, led by the gentleman from Nebraska, and we've gotten that feedback. And that feedback, Mr. Speaker, informs this amendment. It informs this debate. And Ranking Member Waters and I have collaborated together today on several revisions that ensure that these reforms are narrowly tailored and that do not in any way, in some unintentional way, reduce housing supply or disrupt housing markets or harm those in the rental community. The focus of the bill in the House and the Senate, and the focus of our work today in the amendment, is continue to cut unnecessary barriers to new home construction, modernize HUD programs, and allow our community banks to more freely deploy funding into their communities that aid in the development of new housing product, whether it's single-family housing or housing for rent. This bill has a provision in it that also meets the request of President Trump that he outlined in this room in his State of the Union address, that we limit institutional investors from competing with moms and dads and Americans out there trying to buy a house. It removes some of the legal challenges that we felt were in the structure of the Senate's approach. And ultimately, in my view, and I believe the view of Chairman Flood and Ranking Member Cleaver and Ranking Member Waters, this delivers on that goal of not having a young family buying their first home, being informed by their realtor that somehow they missed that opportunity, that the house was bought out from under them by some big shot institutional investor. That's what President Trump talked about here in this House chamber at the State of the Union. And I believe, Mr. Speaker, that the changes that we've made tonight, that we did in a collaborative, bipartisan way, deliver on the President's goal and, in fact, helps this bill. Additionally, this bill modernizes outdated banking regulations so that community banks can focus on doing what they do best, lending and providing loans to families who are looking to buy a home and companies looking to finance construction. Together, these changes strengthen our joint bicameral focus on expanding housing access and affordability without discouraging investment in new housing development. The amendment we're voting on advances practical bipartisan solutions to modernizing federal housing programs, reduce regulatory burdens, streamline the development process, and build more homes to meet growing demand. Congress has a responsibility to pursue reforms that expand opportunity and keep this great American dream within reach. So I thank the ranking member, I thank Mr. Flood and Mr. Cleaver for their tireless effort over the last year and a half, and I'm proud to support this effort, and I urge my colleagues to do the same, and I reserve the balance of my time.
Gentleman reserves. The gentlelady from California is recognized.
Thank you very much, Mr. Speaker, and I yield myself such time as I may consume. I rise in support of 1299, amending H.R. 6644, the 21st Century Road to Housing Act, sponsored by Chairman Hill and me. Tomorrow, the House has a historic opportunity to pass an improved bipartisan housing package negotiated in partnership with Chairman Hill and myself and with the input of many House Democrats. Mr. Speaker, our housing bill is the most comprehensive housing reform bill in a generation and is a huge step toward finally addressing the affordable housing and homelessness crisis in our country. Let me make it clear, and let me take a moment to remind everyone what is at stake or who we're trying to help. The age of a median first-time home buyer is now 40 years old. That's largely because the average cost of a single-family home has skyrocketed and wages have not kept pace. In fact, 22 million households spend over 30% of their paycheck on rent, and 12 million spend over 50% on housing. And what is most shameful, nearly 800,000 people experience homelessness on any given night. This is unacceptable, and we must act now. The House first passed H.R. 6644 back in February. A month later, the Senate amended our bill, stripping out numerous House provisions that would address real problems in the housing market. However, the Senate also added in a poorly drafted ban on large institutional investors buying new single-family homes. I say this not as someone who is a fan of private equity ownership of these homes, but as someone who was concerned that the Senate's drafting was unconstitutional and could lead to thousands of families and persons living with disabilities being evicted, students and service members without housing options, and private equity being incentivized to use certain types of contracts with tenants that have been rife with abuses. For this reason, I called on the Senate to join us in a conference to resolve our differences. Now, while I'm disappointed that our Senate colleagues chose not to conference with us, Chairman Hill and I just kept on going. We pressed on, making those critical improvements to restore the legislation to its intent to address the housing crisis. To be clear, the consequences of simply passing the Senate's bill were stark. The Urban Institute concluded that 72,000 housing units would not be built as a result of the Senate's bill. And even more alarming, the Senate's language also threatened tens of thousands of families with eviction. Mr. Speaker, before I go on, I must say that the process to get here today has been less than ideal. That's an understatement. Chairman Hill, the Speaker, and the White House and I were making changes to this text right up until the last minute. While I support our final agreement, we must inform our colleagues about how this bill has changed since it was posted on Friday, as they will be voting on it tomorrow. So I'm going to describe those changes here. First, the bill removes Section 204, which was the Bill Now Act. Second, we added a new Section 107 called Housing Supply Frameworks. Third, Section 208, the Housing Innovation Fund, now sunsets after 7 years instead of 5 years. Fourth, we added language ensuring prevailing wage requirements under Davis-Bacon apply to Sections 102 and 106 of this bill, which relates to private equity ownership of single-family homes by replacing our text with the Senate-based language, but removing the divestment requirement, changing the definition to build to rent, inserting a renter hotline that requires HUD to respond to renter complaints. Mr. Speaker, this revised House package of needed housing reform preserves more than 90% of the Senate's bill while strengthening it by adding numerous critical House-passed Democrat-led housing and community banking provisions. As a result, we will be providing more relief and support to millions of families and communities all across the nation. The thing is, Mr. Speaker, there is broad recognition in this chamber of the problems in our housing markets. We need comprehensive reforms at the federal, state, and local levels, and a commitment by everyone to get America building housing again. How do we do this? We do this by creating a pilot, increase access to small dollar mortgages, especially in rural areas, allowing housing cooperatives, a type of affordable housing option, to participate in federal programs, creating local databases about unused government-owned land, very important, increasing access to more family-sized affordable housing units, and adding in community bank and credit union reforms so these small institutions can help. These and so many other reforms in this bill are a huge first step toward finally addressing the housing crisis in this country. Finally, the Senate added a temporary ban on central bank digital currencies, that is the CBDC. This is the status quo we have in effect today, as Trump's new Fed chair has stated that he will not issue a CBDC during his tenure. More importantly, this temporary ban is only partial and will still allow the Fed to study other forms of CBDC, like the ones that more closely parallel how currency is used in our economy. So I urge you to join me in passing this bill. And Mr. Speaker and members, I just want to say, we have learned an awful lot over a number of years about what we could do to create some real opportunities. We're now using our experiences working on housing bills to interject into how we're going to be able to get more housing for all of those who are in desperate need and to get the homelessness off our streets. We've learned a lot. And you're going to hear in this bill about how we're going to learn about land that is owned by cities and counties for years that they could get rid of and don't have to do it for market value, on and on and on. And so I'm very proud, even though this has been a real labor. I want to say of love, but it's been a real labor, maybe not of love, but something that really had to be done. And so I think we've finally made these meaningful steps to our nation's housing crisis and strengthen our community banks. And so I ask everyone to please support this bill.
Gentlelady from California reserves. The gentleman from Arkansas is recognized.
Thanks, Speaker. Well, when I think about the ranking member, she knows the respect I have for her, and she has, I'm sure, no less than 4 decades as one of the nation's most strong and effective advocates for housing and housing solutions in our country. So to say she supports a bill is high praise, and we're grateful to her. Mr. Speaker, I have to say that I started my what is a modest career in D.C. as a youngster in my 20s, and I was a staffer on the Senate Committee on Banking, Housing, and Urban Affairs during the first term of President Ronald Reagan. And Reagan was trying to restart the economy after the grim decade of the 70s. It was bad. President Carter had struggled with it. We were in 2 back-to-back recessions. And one of his ideas was, what can we do in housing? Interest rates were at 20%. A little hard to buy a house when interest rates are at 20%, but he had a commission on housing. And one of his top ideas was change the building codes, make them more modern, make them more competitive, both in manufactured housing and in modular construction techniques for resiliency, for energy efficiency. And guess what, Mr. Speaker? We're going to do that today. 40 years later. And we wouldn't be doing it if we didn't have the hard work of Mike Flood, the chairman of our Subcommittee on Housing and Insurance in this Congress, and his partner in this effort, Emanuel Cleaver, Missouri. So I yield 4 minutes to the gentleman from Nebraska, the chair of the Housing and Insurance Subcommittee, Mike Flood.
Gentleman from Nebraska is recognized.
Thank you, Mr. Speaker. Thank you, Chairman Hill, Ranking Member Waters. When I got the privilege of leading this subcommittee, given to me by our chairman, the first order of business after I found out where my office was to go meet Emanuel Cleaver for dinner. We shared a prime rib, and I knew that night that we had something special. Housing is personal. Housing is not a building or a garage. It is where you bring home your first baby and the first bath is under the sink. It's where you tuck your little 7-year-old into bed and you say, I'm doing my part as a parent to protect her from being homeless or living a better life. And when I met Emanuel Cleaver, I could see in his eyes that this was personal to him. And I thought, I'm a Republican, he's a Democrat. God has placed us in these spots to try and fix something for the American people, to make it easier to get that first house, to buy a manufactured home that doesn't have a chassis and save $25,000, to do it for all the right reasons. And last Sunday, as I was coming back to Omaha, we were flying because of storms. I was flying over Kansas City and the lights of Kansas City, and I thought to myself, I want this as much for him as I want it for Lincoln or Waverly or Papillion. And because of our chairman, because of our ranking member, because of our speaker, our leader, the leadership in both parties, we have a product that the American people can look at tonight on this floor and say, Congress did its job. They worked together. They compromised. Did we get everything we wanted? No. Have you ever met the ranking member? She drives a hard bargain. But did we move the ball forward for the American people? And the answer is yes. People send us to this town because they want solutions. They don't want what they get too often at 9 o'clock Eastern. They want to wake up and know that their kids have a chance to get into a home, to park their car in a garage, go to work at the factory the next day, and build a better life for the next generation. And what do we have in this bill? We have a bicameral, bipartisan solution. The institutional investor ban language by the Senate created massive unintended consequences for the market. We know that. But listen, the Senate impressed us with sending a truly bipartisan bill over here. What the American people need to know is this is what the founders envisioned. House versus Senate. Republicans and Democrats united in the House, Republicans and Democrats united in the Senate behind an issue, not a personality. And I credit the leadership for working the way they did that allowed Mr. Cleaver and I to set a table and listen to the Habitat Humanity folks from Huntsville, Alabama, to welcome in the mayor of San Diego, to talk to the mayor of Lincoln, who's high up on the Council of American Mayors, and find out what her priorities are. People are going to get into homes, and they're going to get into homes easier because of this. And I, for one, want the people I signed up to represent to know this is exactly why I want to be in Congress. I'd like to take a moment to highlight a few provisions that I feel will make a difference. 205 and 206, two sections of the bill, work to right-size environmental reviews on both HUD and USDA housing projects. Mr. Nunn from Iowa, big fan of that. This legislation ensures these environmental reviews are properly tailored to the real impact of the project going forward, not just a box that needs to be checked. I worked with Mr. Cleaver on this section of the bill for a long time as it relates to the reform of the Home Investment Partnership, the largest block grant program at HUD dedicated to building affordable housing. What does it do? Slashes the environmental review requirements, eases labor cost burdens like the ones created by Section 3, and with that,
Mr. Speaker, I yield another minute to the gentleman.
Gentleman is recognized for 1 minute.
I do thank the chairman, and provides greater flexibility for cities and towns across the country to utilize home dollars to promote home ownership. Sometimes it's as easy as extending the wastewater and the water system another 15 blocks. Think how far that goes in California or a small town in Nebraska where they only have 2 blocks, and another block means you can get 10 more houses there. That's 10 more families. That's 50 more kids for a school that is on life support. And now they've got housing. Listen, I'm very proud of the committee I serve on. I'm proud of the way we work in a bipartisan manner. I want my career in Congress to be experiences like this, and I thank Mr. Cleaver for everything that he's accomplished in Congress and look forward to continued great relationship. Mr. Chairman, I yield back to you.
I reserve.
Gentleman from Arkansas reserves. The gentlelady
I'm very
from California is
proud
recognized.
To yield 3 minutes to the gentleman from Missouri, Mr. Cleaver, the ranking member of the Housing and Insurance Subcommittee and co-author of this bill, and someone who worked very hard to do some changes in the home program and ensure that for small programs that some questions were raised about, Davis-Bacon, he was right there to ensure that they were protected. Thank you so very much.
Gentleman is recognized.
Thank you, Mr. Speaker. Thank you, Madam Ranking Member and Chairman Flood and of course, Chairman Hill. I rise to support the revision of H.R. 6644, the 21st Century Road to Housing Act, introduced by Chairman Hill, Ranking Member Waters, Chairman Flood, and myself. I appreciate very much the leadership of Ranking Member Waters and Chairman Hill in negotiating this very important revision. To quote Chairman Hill, "This is how Congress is supposed to work," unquote. I could not agree more. And I might add, this is how the vast majority of the American public would like to see us conduct business. Housing remains the single largest expense for the Americans who sent us to Washington. Rising house costs are consuming an increasing share of household income. Families are struggling to cover necessities and are increasingly unable to save enough transition into homeownership. The legislation we will be voting on is extraordinary. The underlying concept updating federal housing programs is a matter really of common sense. What sets this moment apart is not just the concept of the bill, but the bipartisan, open, and deliberative process. The process in the House has made the bill appealing legislatively and politically. It reflects a months-long and different effort to do what our constituents sent us here to do. Chairman Hill did not get everything he wanted. Ranking Member Waters did not get everything she wanted. Chairman Flood did not get everything he wanted, and I can say very clearly, I did not get everything I wanted. But I understand that democracy demands deliberation, and we have a bill that is supported by housing stakeholders and will deliver for the American people. I want to thank Chairman Flood for working with me to reform the home program. Chairman Flood and Representative Rose for working with me to expand access to manufactured housing. Representative Nunn for working with me to reform USDA rural housing programs. Representative Lawler for working with me on HUD oversight and to improve Section 8. And Ranking Member Warren for her partnership in working with me on the innovation piece. I also want to thank Ranking Member Warren, Chairman Scott, and the Senate, who I greatly respect. The revised bill negotiated by Chairman Hill and Ranking Member Waters is an effort to advance the priorities of the House, Senate, and the White House. The constituents in my district, like those all around this country, want to see this bill passed and signed into law. This was one of the greatest opportunities I've had since I've been in Congress. I yield.
Gentlelady reserves. The gentleman from Arkansas is recognized.
I thank the Speaker. I want to yield 2 minutes to the gentleman from Pennsylvania who chairs our Oversight and Investigation Subcommittee, Mr. Muser, for 2 minutes.
Gentleman is recognized.
Thank you, Mr. Speaker. I am very, very honored to rise in support of the 21st Century Road to Housing Act. I want to congratulate our full committee chairman, Chairman Hill, for his diligence and ability to find a solution to a very important issue, as well to the subcommittee chair of Housing and Insurance, my friend Michael Flood, for his words and his just his tenacity in seeing this through. Also, special thanks to Ranking Member Chairwoman Waters, and as well as the subcommittee chair, Cleaver, for everything that they've done to find a solution here. America, Mr. Speaker, faces a housing shortage of well over 4 million homes, while only 1.5 million houses units are built each year. It's a big problem. We have a housing supply problem that this bill addresses that shortfall, and as importantly, expands affordability in home ownership. So home builders tell us that costs nearly $100,000 before a shovel even hits the dirt due to overregulation, permitting, environmental reviews, zoning delays. Many can't build a home for less than $250,000. This bill cuts through the blue tape, I tend to call it, by streamlining bank financing for construction and development loans, giving banks greater flexibility to support new housing. So very important. It modernizes zoning guidance to create new housing developments, speeds up environmental and project reviews that too often delay construction for months, if not years, and increase costs. President Trump and Republicans in Congress, and clearly many Democrats, are determined to address our housing challenges, including preventing institutional investors from owning single-family homes. Again, very important. This legislation proves bipartisan and bicameral solutions are actually possible where results matter more than politics.
I yield the gentleman 15 more seconds.
Thank you.
Gentleman is
Chairman.
recognized.
All future and existing homeowners throughout the United States will benefit from this bill. I yield back.
Gentleman reserves. The gentlelady from California is recognized.
I now yield 1 minute to the gentlewoman from New York, Ms. Velasquez, the ranking member of the Small Business Committee and an author of several provisions of this bill.
Gentlelady is recognized.
Thank you, Mr. Speaker. I rise in support of H.R. 6644, and I want to thank Ranking Member Waters and Chairman Hill for including my language on cooperative housing developments and oversight of monitors and receivers of public housing authorities. Cooperatives provide more than 1.5 million families with financially stable housing across the United States and are a critical source of home ownership. But unfortunately, they are often excluded from federal housing programs. Explicit recognition in this bill will ensure that cooperatives can access the bill's benefits and continue to remain a critical component of our affordable housing stock. Additionally, my language requiring federal monitors and receivers of PHAs to provide annual testimony and written assessment to Congress will ensure Congress is coordinated and providing struggling PHAs with the resources they need to improve their operations and conditions. It will also help ensure effective use of the taxpayers' money.
I yield the gentlelady an additional 30 seconds.
Gentlelady is recognized.
Thank you. Finally, let me say that this bill is a much-needed first step. It is not the entire answer. We must all recognize that we still need substantial monetary investments in housing programs to ensure effective development and reconstruction of the units we need. With that, I urge my colleagues to vote yes. I yield back.
Gentlelady reserves. The gentleman from Arkansas is recognized.
Mr. Speaker, we don't have additional speakers, so I would see if the gentlewoman would like to entertain a colloquy or before we close.
Gentlelady is recognized.
Thank you very much, Mr. Chairman. Chairman Hill, in light of very recent changes we agreed to today, I want to take a moment to make clarifications about the authority Treasury has and should use related to the provisions banning large institutional investors from purchasing single-family homes. Under our bill, the Secretary of the Treasury, in consultation with the heads of HUD, FHFA, and the SEC, may issue regulations to minimize market disruptions and negative impacts on consumers and communities. You and I both finally and firmly agree that the bill allows Treasury to do this and that Treasury must use this authority to issue regulations and clarify the following things. First, the bill was not intended to impact military housing, student housing, disability housing, or LIHTC supported housing as defined in our earlier May 15, 2026 posted draft of this bill. This bill was also not intended to include or impact nonprofits or community land trusts that purchase single-family homes. These entities are not-for-profit, large institutional investors. In addition, large institutional investors are still prohibited from buying properties with land contracts, again, as defined in our earlier May 15 posted draft. These contracts are not subject to landlord-tenant laws and are harmful to renters. And large institutional investors should only be allowed to purchase foreclosed federal-backed properties after individuals and approved nonprofits have been given the first chance to buy them through a 30-day first look period, as described in our earlier May 15 posted draft. Given our congressional intent, Treasury should use its authority to address these concerns and to minimize market disruption and mitigate negative impacts on consumers and communities. Mr. Chairman, I know you agree with me on all of this as we have discussed, and I would love for you to share your thoughts with our colleagues on this also.
Well, I appreciate the gentlewoman yielding time, and I agree with her that throughout this process we've tried to be on the same page and be focused on that we've heard from a lot of stakeholders, from a lot of different companies, a lot of different business models that provide housing options for Americans, and you outlined a number in your comments. These include providers of housing for active duty military families, for adults with intellectual and developmental disabilities, near campus student housing, and of course the senior market. Also included are providers who are organized as nonprofits, as you noted, community land trusts, or entities engaged in federal or state affordability programs like the Low-Income Housing Tax Credit Program. We've also heard from many about tools that we use today to provide for more affordable housing, options like first look programs to give current renters a leg up on becoming homeowners. These are all valuable features of our current system that encourage, not reduce, the great availability and affordability of housing. So I agree with you that we need to make sure that in the implementation of this section that these beneficial features are not inadvertently caught up when they have done nothing to the fundamental problem that we're trying to solve today, which is this institutional investor challenge. Leveling the playing field between individual buyers and large institutional investors is the goal. I think we've achieved it in what we've drafted. These features did not cause the problem that we were here today to solve, and I'd like to thank the ranking member for working with me to ensure that the build-to-rent industry particularly is appropriately exempted in the text that we negotiated and considered today. And I commit to working with the Treasury Department and the ranking member throughout the rulemaking process on these issues. And I yield back to the gentlewoman.
Mr.
Gentlelady is
Chairman,
recognized.
I approve of everything you've said. Thank you.
Gentlelady reserves. The gentleman from Arkansas is recognized.
Well, thank you,
now-
Mr. Speaker. I want to say thank you to the ranking member for this long process. It was a labor of love, I think. I think it was. It was when Arkansas and LA get together, it's good things happen, you know. But I want to thank her for her diligence. I want to thank her staff for their diligence in working with my team, Ed and Shanna, Carrie. All worked very hard and collaboratively on what we did today. But Sheena, I also want to thank Tim Scott and Elizabeth Warren in the Senate. I think too often, you know, we play back and forth work here, but you're actually seeing legislation, Mr. Speaker, going back and forth between the committees. This is regular order. 390 members came to the House floor a few weeks ago and voted for a housing bill that Mrs. Waters and I put forward. That's a pretty big vote in today's time. And likewise in the Senate, as Chairman Flood referenced, Mr. Scott, Ms. Warren, got 89 senators to vote for a housing bill. What does that tell us? It means that on a bicameral, bipartisan basis, we ought to have a housing bill. President Trump has attempted to spur housing and housing ownership through tax changes in the Working Family Tax Credit Act, lowering regulatory burdens so that we can do more housing across this country, and in his own State of the Union, where he pointed out we ought to have moms and dads being able to buy a house without competing against somebody for cash that's some big institutional investor. So that's the executive branch, the House and Senate. We're on the same page. Today we come to the House floor eager, to bring that to fruition, to have a win, as Chairman Flood referenced, for the American people, for greater affordability of housing and greater accessibility of housing. So I will reserve and yield to my friend from California for her closing comments.
Gentleman reserves. The gentlelady's recognized.
Mr. Chairman, let me just say that I appreciate your support of some of the efforts that we made. Because of your background in banking and your experience, you understood exactly what we were talking about when we talked about the banks being able to do smaller loans and to provide mortgages for homes that cost a lot less than the millions of dollars. And so it was because of your background and your experience that you understood right away that we want this pilot program so that we can show everybody that it is impossible to be able to have a mortgage if, in fact, you're buying a home that costs less than millions of dollars. So thank you very much. And now I yield 1 minute to Mr. Liccardo, a member of the Financial Services Committee and author of several provisions in this bill.
Gentleman is recognized.
Thank you, Mr. Ranking Member, and thank you to her and to the Chair for their leadership on this effort. Mr. Speaker, I rise today in support of this amendment to the 21st Century Road to Housing Act. Today, a rapidly growing number of our families, nearly 13 million, appear severely rent-burdened, meaning they spend more than half of their income on housing and utilities. Our housing crisis requires many actions from this Congress, but we should start precisely where we all agree, Republicans and Democrats, on improving affordability through accelerating expansion of housing supply. This legislation, which includes 4 bills that I either lead or co-lead with my colleagues, will take important steps to cut red tape, lower costs, and boost supply of multifamily housing construction, both market rate and affordable. Let's embrace this too rare moment of bipartisanship and approve this package to expand supply. And then let's continue this momentum, rolling up our sleeves to address the affordability crisis that too many of our families are pressed by. Mr. Speaker, the rent is too damned high. I urge my colleagues to support this package. Thank you. I yield back.
Gentleman's time has expired. The gentlelady's time has expired. The gentleman from Arkansas is recognized.
Mr. Speaker, may I inquire how much time I have remaining?
Gentleman has 4 1/4 minutes remaining.
I thank the Speaker. Well, again, let me thank members on both sides of the aisle for their perseverance and for their efforts. Let me thank my friends in the Senate for their perseverance and support of the important policy of having more accessible, more affordable housing by cutting red tape, increasing capital availability to housing. And I want to think about my own constituency in Central Arkansas. The community development officers, Mr. Howard and his team at the City of Little Rock, have constantly approached me that if we could make reforms to the home program, like Mr. Flood and Mr. Cleaver have proposed, it will lower the cost per square foot of the ability to use that program by the City of Little Rock for new housing construction. They've approached me about CDBG money being more flexible in how it can be used for infrastructure and how that could produce more housing availability in Little Rock. The issue of, in this bill, we reform the incentives to investment by bank holding companies to directly invest in housing. That's a major new source of capital that will come to the housing market. And then just think about the reforms we talked about in building codes that have a nationwide benefit. Of some 3,000 zoning agencies will be benefited from those changes. And then also in Little Rock, the importance of HUD oversight. And I want to thank Mr. Torres of New York, Mr. Lawler of New York, and their provisions in this bill that talk about HUD's oversight. How do we hold HUD accountable for doing a better job? But finally, Mr. Speaker, I will close by saying that the ranking member and I have included some common sense, bipartisan reforms to our community banks to make it easier for them to be engaged in their community and delivering for those home builders that are building for our families across our communities. It's important because, Mr. Speaker, 6 out of 10 home construction loans in this country, 6 out of 10, those loans are made by community banks under $10 billion. Under $10 billion. That is the heart of America. It's the heart of Main Street, and that's why the ranking member and I have put a modest number of consensus elements to signal to Americans living on Main Street, living in our neighborhoods, we want to have a supply-side approach. More capital available for the banks, more funding for our home builders, more investment in 1 to 4 families through the provisions of cutting red tape in this bill, led by Mr. Flood and Mr. Cleaver. So I just insist that that, I believe, is so important, and I believe that's been recognized by policymakers on both sides of the aisle. The White House recently reinforced this principle in an executive order promoting access to mortgage credit, which recognized that regulatory changes over the past 2 decades have made it increase the cost to originate a mortgage and service a mortgage, and distorted the structure of the mortgage market. So this executive order specifically emphasized the importance of ensuring community banks and smaller lenders can continue participating in mortgage lending markets, reducing unnecessary regulatory burden. So the executive branch is on the same page with the legislative branch, and I think this poses an opportunity for a bicameral success that we can send to President Trump's desk that increases accessibility to housing, increases affordability to housing, and is a real success in economic policy for this country. I encourage all members on both sides of the aisle to support this legislation, and I yield back the balance of my time.
Gentleman yields. The question is, will the House suspend the rules and agree to House Resolution 1299? Those in favor say aye. Those opposed, no. In the opinion of the chair, 2/3 being in the affirmative, the rules are suspended, the resolution is agreed to, and without objection, the motion to reconsider is laid on the table. For what purposes, gentlemen, seek recognition?
I'd request the yeas and nays.
The yeas and nays are requested. All those in favor of taking this vote by the yeas and nays will rise and remain standing until counted. A sufficient number having risen, the yeas and nays are ordered. Pursuant to Clause 8 of Rule 20, further proceedings on this question will be postponed.